Property investment strategies for beginners. Real estate and property investment is one of the most constantly changing and adaptable investments you can explore. The real estate and property market provides opportunities to make a profit from flipping houses, wholesale deals, and buying and holding property. In this video we are going to cover property investing strategies for short and long-term goals as well as a few funding options for beginners. Investing always has risks associated with it, no matter which strategy you use. First, is property investment a good idea? Here are some of the reasons real estate investing might be a good idea. First, rental real estate is a popular strategy to keep up with inflation because home prices and rental income tend to rise right along with inflation. Second, including real estate in your investments might give you a diversified portfolio. Third, it might also reduce your investment portfolio's volatility because home prices do not go up and down as much or as quickly as the stock market. It's worth noting that real estate investing could be a part-time or full-time endeavor, geared towards either short-term or long-term goals. Although buying a piece of real estate might be very expensive, you could start investing in real estate with little money. Here are some property investment strategies for short-term goals. Wholesaling. Wholesaling properties involves signing a contract and reselling the property to another investor. This strategy does not need a real estate license and does not need a lot of manual labor. The goal of wholesaling is to sell a property for such a low price that other investors will be willing to put in some work to make it livable. Prehabbing. Rehabbing is when you buy a house that needs some work and then you fix it up and sell it. Prehabbing is when you buy a house and fix it up a little bit so that it is more desirable to investors who are going to come in and fix it up more. Prehabbing refers to the process of cleaning up the exterior of a property, getting rid of leftover trash from previous owners, and sometimes even gutting the place to start over. This option provides a good balance between wholesaling and flipping houses. Now, let's cover some property investment strategies for long-term goals. Buying rental properties. If you're looking to make money in the long term, one popular option is to own rental properties. An investment in a long-term rental property appreciates, on average, 4 to 5% annually. The tax deductions associated with owning a rental property can save you a lot of money. Our own personal favorite strategy for acquiring rental properties is to work with a turnkey real estate company to prepare a fully rehabbed property which is rent-ready. Rehab, house flipping. A common real estate investment strategy is to buy distressed properties and renovate them so they are habitable for future tenants or homeowners. Fix and flip properties are popular among investors because they often have a higher return on investment than wholesale properties. Now, let's get into beginner strategies on how to fund property investing. New investors in real estate need to build pools of available money to purchase properties. If you want to invest in a property, there are different funding sources that may be available to you, depending on the type of investment you want to make and the properties you are targeting. Personal savings. If you're looking for cheap financing, personal funds may be the best option. If you have money saved up to pay for your real estate deals, you can act quickly without having to pay any interest charges. Credit cards. Credit cards allow you to pay for repairs, utilities, insurance, and other expenses without having to carry around a lot of cash. Family or friend loans. While borrowing money from family and friends can have its perks, it can also result in some negative outcomes. Personal loans and lines of credit. Personal loans and lines of credit are financing options that are not secured by any property. A personal line of credit is a type of loan where you only accrue interest and make payments if you've taken money out from the account. Seller, owner financing. When you purchase a property using seller or owner financing, you will make your payments to the owner of the property instead of a bank. The advantage to this method is that you don't need bank financing to get approved. Conventional loans and government programs. Some investors may choose to buy a rental property and live in it while repairing it or until the value of the property increases. You may be able to get a conventional mortgage from either a credit union or a bank. Credit unions are usually able to offer lower interest rates and fees because they are non-profit organizations. Each will have its own specific criteria for eligibility. Financing secured through a mortgage broker. Mortgage brokers can help you find the best mortgage deal by shopping around with different lenders. A mortgage broker's fee must be paid by either the borrower or the lender. Cash value life insurance. Our own favorite way to fund at least the down payment for a rental property is to utilize a cash value life insurance policy, preferable a whole life insurance policy. These are also known as infinite banking policies and have many advantages, including repayment plans that you pick and choose. Learn more at 40plusfinance.com.